So, like I was saying, how do you know if his market is going bullish or bearish? Remember, it's not all about the fine drawing that you see, or you see a fine drawing like this. No, like this. No, it's not because of this. So, market is not as neat as your drawing or your diagram. You get. So it's not always as neat as your diagram. Now, the only thing that tells you that market is going to a particular direction is when you have series of break of structures like this one. You see, price broke this low. Understand? Now,
Yes.
this is your low, this is your high. Now this place is protected now. Here is protected.
Mm,
Yeah, you want to know which one market will break. Now market broke this one. Yeah, it did not break this one. You understand? Now you
okay.
have a new low now, and you have a new high. Now you want to
Mm,
see if market will break any of the high or low, either high or low. Now you see that market broke this one. It did not break
mm,
this one. So if you should get
yes.
2 to 3 times move like this, let's just say two two times. It don't need to be many, because the more market create many liquidity, the more it will come and clear them again.
Okay.
Just like when I said, if market has been selling for so long,
Mm,
expect if you should come and meet a chart like this, you don't need to enter more sell. You're looking for
yes.
change of character and look for buy. You understand? Because market will
Yes.
later clear all this place. And if market form a buy for so long like this, it will later come and clear. So that's what market does. So whenever it's
Mm,
too low, it buys. And if it's too if there's too much buy, it sells. So that's why they use most people will say you buy high, you sell low. You understand? Yeah. So
okay.
back to what we are doing. So if you should come across something like this, then that tells you that this market is going bearish. So where what will you be looking for? You'll be looking out for say. You understand? You'll be
Yes.
looking out for say. Now, if you should get something like this now, you should get something like this. Okay, this is where the okay we'll continue. Don't worry. So
Okay.
this is where everything change. This place.
Mm,
You understand now?
mm,
Though there's
yeah.
another one here. There's another one here. Yes, there's
Mm,
a low here. Now you are looking for, you are expecting the market to break it to continue or break this one. So which one will market take at? This one or this one? And you see the market though, market took this one. So automatically price has
lower
changed from say
in
to
the
buy from this place. You get it
yes.
now. Now you
Yes.
confirm market direction now. Now you this one is not protected now. Expecting market to take it out. This one is not protected. And the market and this one is protected. Now you want to know the one market will take out first for you to fully convince that market has changed direction. Now market came, it could not take out this one, but it took out this one.
Yes.
This one is protected. It took out this one. So that's the thing that this market is now going up. You understand?
Upward.
Has changed direction. So
Mm,
you will no longer be looking out for say, or you'll be looking out for buy. You get now. Now you see
mm,
all this area here. When you see all those area.
yeah.
So those are the places you'll be looking for, no, for fair value gaps. You understand? If market should
Okay.
come like this, hmm?
Yeah.
Now you see if there's a fair value gap here, that's where you this even if you have many fair value gap, but you want to get a fair value gap around this area. They call it discount zone. You understand? Pay attention. They call it discount zone. You want to wait for fair value gap around this area to take your buy, because you don't want to say
Okay.
it's buy you are looking out for. There's fair value gap everywhere. You can get a fair value gap here, but you can't
mm,
be interested here because there's space here and market might come down here. Market might clear that fair value gap and come to this side. So you are looking for fair value gap around this discount zone from your swing low to your swing high. Let me clean this thing. Hope you are following.
I'm following, sir.
So I'll explain again. Use the diagram to explain. Now you have a trend. Huh? There's fair value gap everywhere in the chart. Now you are only now this is a swing low, this is a swing high, swing low, swing high, swing low, swing high. Now the only place you are looking at for fair value gaps, if you don't see it, don't take the trade. If you should see fair value gap here to be valid, you understand? You understand what I
Mm,
mean? If there's fair value gap here, that means is valid. You understand? Because you expect price to come tap and go up again. You get it now?
okay. Yes.
So you cannot be
Okay.
looking out for fair value gap here around here. You cannot be looking out for fair value gap around here. Imagine you seeing a fair value gap here and here. Which one will you go for? You go for the one here because price breaks social. Whenever price breaks social, it always come down. Pay attention to this one to help you. Whenever you get break of structure, expect price to always come down before moving again.
Mm,
So if you should get a break of structure and you get a fair value gap around this area, make use of this one. Even if you have a value gap here, this one is not valid, but this one is valid. Make use of this one because price will pull back to tap from it and move and target here. So that's
okay.
how you look for a valid one. You understand it now?
Mm, yes. I have a question, sir.
Okay.
From the look of things, I think could we say that fair value gap mostly comes in to take out liquidity before it now, retest. Probably the market is going uh, bearish, bullish, right? It's going up.
Mm-hmm.
And then there is maybe that's created a fair value gap confirmation. So will it retest now to break the, should I say, lower high before it will now retest back to continue going up?
I don't understand.
Okay, let's assume it has created a pattern
Mm-hmm.
of a good trend.
You have a pattern like this.
Yes.
Mm-hmm.
So let's assume now that place that you showed me,
Mm.
let's assume I confirmed my candlestick pattern. It showed me a fair value gap.
Yeah.
Stand. No, not there. Go
Mm.
back.
Yeah.
No, no, down, down. Let's
Mm.
say somewhere there. No,
Okay.
not there.
Yeah. Yeah.
No, not the second. The second one.
Yeah. Yeah.
No. Yes, but down. No, the other side. Supposing I have my confirmation around that place for the fair value gap, right?
Mm-hmm.
Since that is where I can confirm that these candlesticks are set up for my fair value gap.
Okay. If you should have something like this, like you're saying if you have a fair value gap here, by the time you know
Yeah,
that block, you really know how to. Then you know how to use fair value gap. By the time we talk about other block, I think you see other use of fair value gap. You see other use.
okay.
So if you should see something like this, this one is
Yeah,
liquidity. You understand?
yeah, yeah.
Liquidity. If you should see a fair value
So,
gap here, you see a fair
mm,
value gap here. Okay, let's say your SL should be below here. Abi, your SL will be
Yeah.
here. Ehen. So
Yes.
price can, this one is a value fair value gap. Now, if you should have one here, then let's use this one for example now, because
Okay.
you have to confirm direction first.
That
Ehen.
on the
You
trend.
cannot use this one. Ehen. Let's assume you've confirmed direction already. So let's say you've confirmed a break of structure here, you confirm another break
Uh,
here. Ehen.
yes.
So this is how you use fair value gap. Now let's assume that you see a gap here, fair value gap here.
Yes.
You see another one here.
Yes.
See another one here.
Uh,
So now you don't know the one to pick. Now
yeah.
the one you pick, there's something, there's how we use something they call Fibonacci.
Okay.
Or
It's
even
a
if,
candle.
no, it's not a candlestick. Okay, let's
Mm,
leave Fibonacci on that day. Now if you should take this place, measure this place to this place. Hmm?
mm,
There's where they call a discount zone below 50%. Now, discount zone means that if you should share this thing into two, if you share this thing into two like this line that I put, if you share it into two, let's say the year is 50%. Hmm? Anything that is below this 50% is your discount zone. So you are interested in anything that is below 50% of this low and this high. You understand now? You are interested in anything concerned because you expect price to always come down to this area before going up. You
yeah.
expect price to always come down to this area before going up. You understand now? So even if you have
Yeah.
many fair value gap, but you choose the one that is below that of 50%, below half of this distance from here to here. You understand now? So that's the fair value
Yeah.
gap you choose as valid one. You get it
It
now?
now has a. Yes.
Mm.
I understand.
So that's how you get.
It means it
At fair
means
value gap, you
the
don't target much of fair value gap. The next high is your take cut
uh,
or your target. You understand, your take profit. If you should enter from here, now here should be your take profit. So you don't really target more.
okay.
Just for you to understand it, it doesn't mean that that's what you'll be using for trading, but get to understand it. People still use it to trade and it works. But understand how
Okay.
it works and know
Yeah.
what they are. You get, because you
Yes.
need it as we
It's true.
move on to the next one. Do you understand it now?
Okay. Yes, I understand now. I understand what I was about to ask. So, if the market, supposing the second value gap now, uh, yes, that's where you took out the trade now.
Mm-hmm. Yeah,
And then, yes, supposing you place your entry point there,
yeah.
the
This
market will know. Okay, okay,
so you wait patiently for the market to come to your zone, then you enter. Then your stop loss will be below the previous low.
mm,
Remember, here's your
yeah.
protected low. So your stop loss should be below this place.
My
Get
TP can be above.
it? Exactly. You get it
All
now.
right, I understand. Get it.